Okay, so good day. We are back with our expert mortgage broker here, Snezana Todorova from BRX
Hi,
Mortgages.
everyone.
Hi, Snezana. Thank you for joining us here today because being a homeowner myself, I am most curious about this. And I'll tell you, even in speaking with clients, these things are coming up, and not everybody. This is something we know being in the industry. Not everybody is constantly following the housing market and the changes.
Well, and honestly, it's almost impossible because there have been
Yeah.
so many in the last, I would say, 4 weeks. Let's say
Yes.
4 to 6 weeks. I would say let's be generous, 4 to 6 weeks. But even
Yeah.
for myself,
Yeah.
I had to update my notes, keep track of everything because
Right.
it's of course new and exciting, but at the
Yeah.
same time, it's some bits and pieces of information that we're still waiting on. So.
And that's the thing. It's even knowing the difference between what's a proposed change and what is actually coming into effect. And I know that, I'm going to be very short here because it's going to be these changes are big and they affect many, and it can actually even improve some people's purchasing power coming up.
Mhm.
So I know that I believe December 15th happens to be a very important day in our mortgage industry. Right?
Yes.
So I'll let you take it from here in terms of what are actual changes that are coming up for first time home buyers. Maybe we start there.
Yes, and I feel like this would be the most important one, which is is extending the amortization for first-time home buyers from 25 years to 30 years. Basically, many people probably know the amortization is the number of years that a borrower pays off the mortgage in full. So, as of right now, for anybody who is making less than 20% down payment, that amortization has to be 25 years. This is changing though as of December 15th for first time home buyers that they can choose 30 amortization, even if they make less than 20% down payment, which I would say 90% of the first time home buyers do have the minimum down payment. So for anybody who is considered first time home buyer, meaning they have never owned a home before, they've never been on a title on the home, or there are also some exceptions for somebody who has gone through a marital breakdown as well. So this is also good to know.
Oh, that is a
Or
big topic,
Mhm.
actually. That would be such a good
I
segue
feel
for a
like we
different
should do
conversation.
a different exactly
Absolutely.
that segment. But again, for first-time home buyers are able to purchase as after. So it's also good to know that actually we have to submit the application after December 15th. So let's say just to be sure, December 16 would be the first day we actually are able to enter the application, submit it to the lender, and choose 30 amortization.
Okay.
And how this affects first-time homebuyers in two significant ways. Let's say I just quickly did, of course, a little bit of a math here,
For
and
sure.
let's say for first-time homebuyers with 120 or 140,000, let's say, income, they can pretty much qualify, let's say, for a $650,000 purchase price, and they can, if they choose to have the same mortgage amount but stretch that over 30 years, their monthly mortgage payment would be lower by approximately $280 per month.
And that's a
Or
significant amount.
or if they choose to, they can also qualify for a little bit more because we are amortizing the mortgage over 30 years. And instead of 650 purchase price, they could potentially go to 685 approximately. So that's
Right.
about 35,000 increase in their borrowing power.
Right.
So I
Now,
feel like, yeah.
in your conversations with first-time home buyers, right? What has been the reaction to something like this? Have you been able to sort of gauge how it's being received?
Absolutely, especially I would say the combination of having a little bit more borrowing power with the monthly payment staying the same or a little lower. I feel like that's something that many first-time home buyers are excited.
Yeah.
Now, in combination with lower rates coming across, I feel like people are more open to have and revisit their conversations from last year, the year before that. So we're having a busy season. So
Oh,
uh,
yes,
we're
absolutely.
happy
You know what?
will
A
be.
busy season with first-time home buyers, and I'm sure also a busy season for people that are coming up for renewal.
Yes.
Busy season, if people want to consolidate debt, and
Mhm.
refinance, like those are conversations that are actively being had, especially if you've either been on a painful variable for a very long time, and say bonds are coming down, or if your low fixed rates coming up for renewal, right? Start that
Yes.
conversation.
Yes, honestly, last year and this year, those conversations has been a little tough. Just showing what the new monthly payment could be, and especially for any borrower who has been in a very low rate, but they haven't managed it properly. I wouldn't say manage it properly, but maybe reminded that they can possibly increase their monthly payments each year, so they get accustomed to a high monthly payment as well. But having talking about renewals, this is the other potential change that right now
Right.
borrowers who are switching lenders at renewal time don't have to undergo the stress test. And as a reminder, the stress test is basically a measure to make sure that people can sustain higher rates, and typically we have to qualify the borrower at their contract rate plus 2 basis points higher. So, for example, if
Okay.
somebody is getting a 4% interest rate, we have to stress test the application at 6%.
Right.
Now that rule is being removed for borrowers who are already, they do have an existing mortgage, they're just transferring the existing mortgage as is to a different lender. So they're not increasing the mortgage amount, they're not changing the amortization schedule, they're just taking the existing mortgage and transferring it to a new lender. They do not have to go to undergo the stress test, which gives them more ability and also borrowing more options to choose from, and potentially that will have they will cause lenders to be more competitive and also offer better rates at their existing clients at the first renewal attempt, not only after the client is looking to leave that lender. So definitely
That was
higher.
going to be my question,
Mhm.
actually. It is okay without the stress test, which has been around for quite a little bit. Are lenders going to be more competitive now to capture and keep that business?
I would say so, yes. I would say
Yeah,
so.
right.
Absolutely. And
Um,
it's
when does
something
that
that,
come into effect, Snezana, for the renewal?
yes, for the renewal, so switching lenders at renewal on November 21st. So that's
Okay.
next month,
That's
actually.
sooner. Yeah, that's sooner than we thought. Okay. All right. And in that first-time home buyer, can you also touch on the price cap, like the increase from a million to
Yeah.
1.5 million? Because that's a big one.
Yes. So just to clarify, so now insured mortgages as of December 15 would be considered up to 1.5 million. As of today, it's up to 999,999. So just a little bit like a dollar under a million. And actually, this change would be for any buyer. Like it could be a first-time home buyer or repeat borrower who, let's say, have sold a condo and they're looking to upgrade into a bigger detached home.
Okay.
Yes. So this is as long as the property is owner occupied or
Right.
a family home or a second home. If so borrowers would be able to put less than 20% down payment on homes up to 1.5 million. As of right now, of course the 20% down payment would be 300,000. As of December 15, if they are looking to purchase a home at 1.5 million, the minimum down payment would be 5% on the first
Mm-hmm.
500,000 and
Mm-hmm.
10% on the rest, which comes up to 125,000.
That is a
125.
significant change considering home prices, and especially if folks want to stay where they work, right? There was
Exactly.
this trend of people moving away to qualify, wherever they could and drive as far as they
And
qualify.
I would say so, just what I've seen from before. I feel like those type of folks would be not necessarily looking at 1.5, but maybe like 1.1, 1.2,
Yes.
that price point where, all of a sudden $50,000 difference, let's say from a million 50 to let's say 998, for example,
Yeah.
that down payment is significant. What it
It's a
used to be, but as of December 15, it would be.
So
Uh,
that's December 15th. I think that is a big change.
mhm.
That especially in terms of, let's be honest, if you're looking for a single family double car garage anywhere in the GTA, even pockets of Guelph and Kitchener,
Yes,
you
it's
are looking at over $1 million. It
mhm.
is in good school districts and close to the highway. Those come with a very big price tag. And I think that this should.
Yes.
coupled with if they're a first time home buyer and if they're able to capture that 30-year amortization, I think that's a
Mhm.
winning strategy.
There you go. Absolutely. And then another small change, I wouldn't say small, but again, it is would be beneficial, is for anybody who is buying a new construction home.
Right.
So pre-construction, new condo, new home. Again, as long as the property is would be owner occupied or family home or occupied by immediate family member, they can choose a 30 amortization as well. Again, it can be either repeat buyer or first time home buyer, as long as the property is owner occupied. So unfortunately for
Okay.
investors buying rental properties, they still
Right.
need to make
Of
20%
course.
down payment. Exactly. And then, of course, 30 amortization would be also possible. But 20% down payment for investors for rental properties. But as long as if the property is owner occupied, no matter if it's a first time buyer or repeat buyer, they can go with 30 amortization in less than 20%.
So, an investment property, I'm just asking because this does happen. An investment property for the sake of someone's child who's starting university, let's say, and you purchase a property for your kid to
Mhm.
stay in it, and that's family occupied, right? Are you
Correct.
able to then capture and use
Yes.
some of that new build,
Mhm.
the changes?
Correct. Yes. As long as
Okay.
the home is occupied by,
Yeah.
let's say, the
Family.
child, the student, the
Yeah.
university student,
Yeah.
and as long as it's not rent, exactly. So as long as it's at least one unit is being owner occupied, that all it matters.
That's huge. That's
Hmm.
huge, because we live in a city that has a thriving university here, and a lot of folks are starting to look at investment properties for their kids to go to school, right? And I think that this is a good incentive to keep, as long as
And
you can keep those monthly
exactly, and
payments a
just
little
confirm
affordable,
exactly. Yes, exactly. Yes. So again, the most important criteria is the occupancy status. So as long as
right?
one unit is owner occupied, this would be considered an owner occupied
I
property.
think there's so much there also that we have to dive in on a different conversation, but today's conversation is really just to highlight key
Mhm.
changes because there's many. And Snezana, before we move on, I want to go back. Can you maybe quickly talk about insured and uninsured mortgages and what
Yes.
the difference is and how it exists right now?
Yes. So insured mortgage is a mortgage where the borrower makes less than 20% down payment. And we have three mortgage insurers here in Canada. So CMHC, Canada Housing and Mortgage Corporation, Canada Guarantee, and Sagen. So those three companies are the mortgage insurers, and any borrower who makes less than 20% down payment needs to obtain a mortgage insurance from one of those three providers. The good news is that the mortgage insurance is added into the mortgage, so you do not pay it out of pocket. There are few, well, there is an well, sorry, not HST, provincial sales tax, so PST on that insurance that is being part of the closing costs. So the benefit for the borrower is that since the mortgage is insured, there is less risk to the lender. So majority, I would say 99% of the time, we have more competitive rates for mortgage that is being insured. However, at the end of the day, again, you do get some additional costs because the borrower pays the mortgage insurance. Now, a mortgage that it's not insured, so uninsurable mortgage, is where the borrower makes more than 20 or more than 20% down payment. There is no insurance added to that mortgage. And as of right now, because it's not insured, the borrower can stretch to 30 amortization. But of course, this is changing as of December 15, where insured mortgages for first time home buyers can also be over 30 years amortization. And for uninsured mortgages, interest rates are a little bit different because, again, there is a little bit more risk to the lender because the mortgage is not insured. So they offers a little bit, there is a little bit of surcharge to the interest rate.
Right. That was going to be my question. And that could be, I mean, I'm sure that's a case by case scenario as well.
Absolutely, yes, yeah.
Right? Because that would be the next question. And it's very difficult to answer that in a general average lens because it depends on that person's portfolio, I would imagine.
Absolutely, exactly. And it also depends. The uninsured mortgage also can be 25-year amortization or 30 amortization that
Right.
also has a play effect on the final interest rate. Yes.
Yes. Okay. So we've covered first time home buyers, the
Yes.
price cap increase. the amortization renewals from November 21st.
New
What are we missing?
construction,
New
yes. New
construction. Yeah.
construction I mentioned, no matter if it's a first-time home buyer or repeat buyer, borrowers can go up to 30 amortization with less than 20% down payment. And the latest change as of last week that came out is for existing homeowners looking to add a secondary unit on their property. Yes. So for
Hmm.
anybody who is currently owns their own principal residence, they can refinance. So refinancing meaning restructuring the existing mortgage, increasing the existing mortgage in order to tap into their equity and add up to I would say three, so basically up to 4 units on their property. So for example, this is kind of an extreme example, but 4 units would be something if it's already maybe a duplex and they would like to make it a triplex. But I would say the people who would most benefit from that would be, let's say, maybe a detached or semi-detached homes that can be, the basement can be converted into a legal basement
Hmm.
with separate entrance and of course kitchen, bathroom, and separate entrance. So self-contained unit.
Right.
And or for many property owners in Toronto, if they're able to add a laneway house on their
Yeah.
property, again, fully self-contained. And the difference, what the new change is the amount of the mortgage that they can get. Up until now, refinancing is limited to 80% of the property value. So let's say if your property value is appraised at $1 million, the maximum mortgage or a combination of a mortgage and a line of credit can be up to 80%. Now this is changing. The maximum mortgage can go up to 90% of
Mm.
the as improved value of the home. So not the current value, but what the value would be after the self-contained unit is being added. Of
Mm.
course, that brings the value up, and then the maximum mortgage would be 90% of that as improved value of the home.
Wow. They are really trying to increase housing,
And
it feels like.
exactly, and just an important factor to consider is that the newly created rental unit is for long-term rental purposes, not so basically
Not
no
Airbnb
short-term
and
or
yeah.
Airbnb or anything like that. So,
Yeah, that makes
and
sense.
there's still some more details to come because again, because this is a change from the insurers, this type of mortgage would be actually insured.
Right.
There would be some mortgage insurance premium, so there would be
Oh,
some
for
cost
sure. There
in
is risk involved here, and there's multiple. This is not an easy, simple undertaking. Adding an ADU, getting the city involved, making sure it's registered, and all
this.
the, building codes. Like there's a lot that goes into adding an ADU to a property.
Mhm.
Um, but there's also a need for it. If this allows people to hold on to their property and at the same time assist other people. I think that, not everyone invests in a way to always capture people from the outside. Sometimes you can do this even for your own network, right? Like there's a little bit of safety there as well. People, I actually know of neighbors that did this for their kids who are going to university. They redid their entire lower floor for them, right? Sometimes it's for your own family unit, but it also helps you long term financially, right? So sometimes there's very small ways of
Mhm.
just moving the needle forward and becoming an investor
Well,
in your own home.
for that specific program, we will have more details coming up, and it's supposed to take effect as of January 15th
Yeah,
next.
these are a lot of changes, Nizana. Like, there's quite a bit. Are you finding that you're constantly having these conversations?
Yes,
Yes,
I am actually, but again, at the end of the day, it's something good that many borrowers will take advantage of,
yes,
and I feel like people will have more choices to when it comes to their financing, and most importantly, lower payments with the 30 amortization, which I feel like is the biggest help for borrowers and
yes.
being able to again manage the payment, have a better cash flow, and keep up with all the other bills as well, right?
And that's just it. And I love that the focus, every time we have a conversation, the focus comes back to that monthly payment because
Correct.
that's what you live on. Like that's what's going to affect your bank account, that cash flow immediately, right? Nobody is thinking about 30 years down the line. Like you're thinking about your daily habits and how they affect your budget and what's in your account. So I
Absolutely.
love that you keep bringing it back there.
That's always work in progress, managing your finances, the monthly cash flow, being able to save, allocate funds for emergencies, and so on. So,
Yeah, absolutely. Thank you. Thank you for breaking this down. And I know that there will be a lot more.
yes, I
There,
feel like as we learn more details and as we get
yeah,
closer, we can probably do another
we
call,
should
that segment, just talking maybe for a specific topic. Because
for
again, as
sure.
you said, and I even probably I'm getting confused a little bit, but I have my notes in front of
No,
me.
no, you're very clear. No, no, you definitely, but there's nuances within that, right? Like we
Correct.
covered insured and uninsured, but maybe we need to break down amortization a bit, right? Like there's so
Mhm.
many nuances. So I think this gives a very clear gist of what's coming in timelines as well. And people can absolutely get in touch with you. That's the
Absolutely.
best thing.
Yes. Because again, at
Thank
the end
you.
of the day, every situation is different. So, um, as you mentioned, there are also some nuances for specific situations, and sometimes they change the criteria, especially as I mentioned at the beginning, the first-time home buyer and who qualifies as first-time home buyer as well.
Yeah. Okay,
Mhm.
so October 23rd, there's another rate announcement, and today inflation dropped to 1.6%.
So the chances of getting a bigger rate cut are increasing.
Yeah,
We'll
yeah.
find out next Wednesday on the
We'll
23rd.
find out. I know. We'll find out. There's many schools of thought that come
Mhm.
around this, but with every rate drop, there's also a little bit of, oh no, oh no, what is going to happen to our housing prices now? Oh no,
Mhm.
like our. So I know that that's a conversation we're having actively with people in the market, and there's almost a short window to capitalize on this negotiating power that we have in offers. There's a lot of room to shop right now, So
Yes.
um,
Um, and I feel like things will, well, you are the expert as well, but I feel like with rates and more options coming up, there would be certain pockets where most likely home prices would um, increase
yeah.
as well.
Definitely. There's still places that within a day of being listed, they're sold, right? Like high performing neighborhoods and good school district and access to the highway and so many things. And if a home is presented really well, you're still
Yes,
winning in any market. So,
true.
well,
No,
thank you, Snizana. I feel like you and I could keep talking
for
about
sure.
homes and the market, but this has been such a good, succinct video on the changes coming up more immediately. And we will have more conversations to follow. Thank you.
Thank you.